Hello, I am Collected. I'm going to just do a quick run through a demo of the semi-auto trading bot I've made. I'll probably put a blog post up alongside this with a lot more detail because I did just try and record a sort of a talk through. But to be honest, I think people just want to see at this stage, what it's about, and you can read the detail in the post. So it's a semi-automated bot, as I said, with a swing and a scalp component. It'll enter on the hourly for the swing component on these yellow signals here as it happens, and it'll enter on the white signals on the 5-minute chart for the scalp side. So what it's working on is strength differentials between the two currencies in a pair around key areas, which, well, for the moment, they're actually based on whole and half numbers after seeing Bookmap and Quant Tower order book type software. Clusters of orders around these areas are so common that trying to get calculation of support and resistance based on zigzag or some variant of a moving average is a lot less resource intensive, and it works when you go to new areas outside of the last year's range, or there's so many ways that it's useful as a proxy for support and resistance, that when strength starts to turn at that area, you've got a good chance of, and this is a particularly good run on Aussie dollar here. As you can see, nearly all of the signals hit, but it obviously it's not always like that. If we go to something like, which I wouldn't necessarily choose to run it on, but Euro Pound, and have a similar look, you can see some fake out type things here. Fortunately, the bot has risk management stuff built in, of course. Very data driven, and I like a smooth equity curve with not too much drawdown. This isn't one of those up and to the right non-stop until it breaks type bots. This is a very controlled multi-stage exit and entry bot, and diversified across the two time frames. So here's the M5 on Euro Pound. Again, Euro Pound is sketchy because obviously these currencies are not as different as some others may be, or opposed to each other. But yeah, so the white dots here represent the volatility changes in a new kind of sort of calculation that I actually haven't seen anywhere. I've trawled the whole of the MetaTrader code base and all the sort of user contributed stuff. A lot of the TradingView code base I've been through as well. And yeah, I think this is a new way of measuring volatility. The indicator at the bottom of the screen here is not necessarily relevant. It's based on similar data for strength, but yeah, it's not something I'm using directly in this. So yeah, so let's just quickly jump to M5. So you get these kind of volatility swings picked up reasonably frequently. Obviously this section highlighted here is the Asia session, and yeah, I wouldn't necessarily be looking at entering loads of trades in that area, but if you get into sort of the London Open through New York close, you can pick up some nice volatility moves there. Semi-automatic is because, well, at the moment the entries are automated and they don't give you the yes no option that I have had before. I can't, that is a switch you can put in, but yeah, the ability to exit sort of at an optimum area is the semi part for the moment. You can leave it because the backtest results, as I'll show you in a minute, are positive across the majors. I wouldn't necessarily work on the minors or exotics or anything odd like that, because the volumes aren't there, the price jumps around a lot more, and just the way the bots work don't suit it necessarily. Manually maybe, but if you're trying to automate, yeah, just stick to the majors. I give a list of what pairs, the 6 or 9 pairs that I think it will work reasonably well on. The backtests are actually quite decent. I'm very happy with them. I'll run one now just to show you. Hang on, if I just break the bot out. So this would be, if I just put a quick one on for the volatility. Scalping side of the bot. And they are 2 EAs essentially. So you'll be running one on some H1 charts for the swing and the other on M5 charts. I decided to break them out because there are separate use cases, risk parameters, and I know it would be more user-friendly to just use one, but this extra flexibility of breaking it out, one use case per EA, I think will be beneficial in the long run. Let's see if we've got any results coming in here. Dollar CAD keeps coming up well in the scalp test, actually. They are obviously quite closely linked currencies, but I don't know if it's the oil price or what, but they do seem to, when they do diverge, they diverge really well. There you go. Now this looks cherry picked, and yes, it is cherry picked, but only in as much as I've taken out the crosses that I mentioned before and the minors. I've filtered out anything that ends in NZD or starts in NZD, anything CHF apart from USD CHF, and anything yen based apart from dollar yen, because yeah, for the reasons same as the minors and majors, they flit around too much for this strategy to really take hold. So the majors, euro dollar, pound dollar, Aussie dollar, and gold is involved, but that's a separate use case. I'll have to make a separate video about that. You can use this on gold, but there are some different parameters that you need to employ to make sure you get the best of it. So this was starting with a 10k balance over 5 months. I think I set it up as on the 5-minute chart. Bearing in mind anything on the 5-minute chart tends to just tank on most strategies just struggle basically to stay alive down there. So this sort of shows a bit of the robustness for a recent period from this year. This is uncompounded. Obviously the compounded effect of all of these, plus any intervention you do to a lot of the trades go flat, they go back to break even or to the last trailing stop. If you have better information than the bot, for instance, you hear that the pound is tanking, or anything else from the real world, you can intervene and get the best out of each trade. You can see the drawdown for these risk levels, which is 0.5% initially and then 0.25% for any scale-ins it might detect. It's kept under 10% for the drawdown. Probably averages to 5 by eye. I can't remember exactly what it is here, but Sharp ratios, as a lot of people say in Forex, are sketchy. Sortino would be maybe a better one to look at, but I think profit factor for us. And also getting a visual, maybe I could run a single track. Maybe I could do the euro dollar one just as a baseline comparison. No, I'll run the swing if the settings are still where they should be. I will just do it from last July on H1. All pairs and double check. Yeah, I think that's where it should be. H1 is actually a bit quicker than M5 to test, so it shouldn't be a massive amount of time till I can show you the results. And there we go. That there is the swing bot over 9 months, I think. So maybe 10 trades a month per currency, 5 to 10. Drawdown, in this case, slightly higher, maybe averaging to 6% rather than the 5. You also could reconsider using Aussie CAD, for instance, in the pile. Same way, reason I took it out of the scalping. But what else to say? Yeah, you can see that the account has pretty much doubled in those 9 months. We've got 5k there, 6, 7. Well, it's actually when I run with a few more pairs involved that it doubled. But yeah, you can get up to 60-70% in the 9 months on these reasonable risk parameters of 0.5% entry, and again scaling at quarters, 0.25%, maybe once or twice max. Well, it is 2 times max. And then, yeah, it exits a little bit differently on this one. The trailing stop comes into play more on the scalping bot. This one has a more indicator-based exit. And it starts to unload past a certain point. And it basically adds maybe a third onto the bottom line compared to just a standard trailing stop loss, all tested to the nth degree. What to tell you? These are tested on the hourly bar, the swing trades, and they are on the close of the hourly. So same with the scalp one, they're on the close of the M5. Yeah, so it never gets triggered sort of midway through the hour on a bit of spurious data or something. It's at the end when the bar's closed. What's the situation at that point? And again, that's great for resources because you're not calculating everything every tick. It's very efficient and lightweight. So run on a VPS laptop. We'll talk about sort of performance and fault tolerance in another video, but suffice to say there's enough built into this to enable you to keep running and give you time to sort something out if you lose power, your internet connection and whatnot. A few things you can do to make sure you've got some redundancy built in. But I won't go into that now. I'll just jump back over to the charts. And one thing I will do just before we sign off there, say I do, I'll just show you what it looks like on the chart. So if I just get cable, GBP USD, and run the same test just on that, I think it was about 25% gain. And we look at the graph, you can see the green line is the equity, so it draws down slight amounts, but the wins are outweighing the losses. See now, anywhere it spiked over and then went back to break even or lower, that's where a manual intervention could have worked out. So you can see there's probably a fair amount of times where you could have built your equity curve even higher by keeping an eye on it. And with it being the hourly charts, you do get how many, at least an hour normally to sort something out if you're not happy with it. You get an alert on your phone, trade been taken. You go and investigate, you monitor, and if you hear other news or you know that something's coming up, or if NFP is coming up or something, you can just disable, exit, quit, whatever you need to do as if it was a normal trade you'd entered. And if there's no initial trade, then there won't be a scale in, so it's really safe to start just taking off a position if you need to. Or you can do partial takeoff like MT5 allows. Let's just what was that here? We got win rates only 29% on shorts and 35 on long. But because of the risk reward, so sort of the average profit loss is $47. The average win is nearly 5 times that, 4 times that. Sorry, the average. Consecutive wins and losses 3 and 2, they're about the same. What's it as well? Let's see if I can show you this stuff. There you go. Drawdown 4%. That to me is really sort of pleasing. That's what I'd be looking for. And a lot of where it says it's lost is essentially just it getting out safely, right? So I've set the parameters to sort of a safe mode. You can twiddle them. You can make it, give yourself more room for the stop loss, which will maybe increase your win rate, but won't necessarily increase your profit as your stops are wider. Some good examples of trades. See this scaled in, and then the scale in didn't lock in a break even. So you could have exited at any point down here with the other initial trade and made more of that. Same, with all these other ones. So that's why I say semi-auto. So it will run on its own and do well, but you can also improve it. And I'll be working on it as we go along to certainly get it to maximize, because you don't want to capture profit when it could run on further. That's always the balance to take. How much of this move am I going to take? How likely is it to reverse and go back the other way? And it's a constant juggling act, but at least with the manual intervention and the oversight, you can start to tease that apart, looking at, sort of past support and resistance areas and any real world events, as we say. So that is how it looks on test. Those are the results. And you've seen the white dots being the volatility based ones, which work better on the lower time frames. And you've seen the yellow ones being the turning areas at key points. What else is nice to show? Yeah, I think that's sort of our general overview starting point anyway. I did have, as I say, a lot more detail to put in here, but I think that's probably more about people more interested in the sort of mechanics of it. So I'll drop that in a blog post, and I'll explain why I've used quarters as a support and resistance, or whole numbers as a proxy for support and resistance. I'll explain more about sort of why I ended up wanting a semi-auto bot, because I had a working strategy that could be run manually, but I'll go into how well that worked out for me. It's crazy, the demons that can just lurk in your the back of your mind, even though everything's great on paper. Well, yeah, when you get to the actual market situation with money on the line, yeah, it's different kettle of fish. We'll talk more about the fault tolerance and redundancy in the blog post, and what you might need as a sort of a baseline requirement for yourself to take this on. I am, just to point out here, that I am looking for people who are experienced traders already, more or less, or who know their way around the market somewhat, who haven't just got the $100 account they want to flip. This is more of a long-term thing. As you've seen, we don't have the massive drawdowns that potentially possible with the bots with zero stop loss, the turbo hamsters of the world and all those ones that you see on my FX book. It's safer. Nothing's 100%, but it's built with that kind of safety in mind. And I hope really that makes sense to the more seasoned traders out there who sort of recognize, what I'm trying to do and what I've done. I do want to trade this myself, and I will be on a bigger account. Sort of, I should be able to start with that in earnest to share results in the next few weeks or months. But I wanted to get this out now, start sort of spreading the word a little bit, and you'll see results basically if you follow along. Subscribe to the channel, follow me on Twitter and all that stuff. You'll soon start to see how it's performing in the real world. That might be more interesting. But for now, people with decent sized accounts with experience can see the value in this and what it's trying to do. And it's something that could diversify your portfolio. It could be that 5% risk investing that is often advised, that 5% speculation on the higher risk stuff. Or this could be your whole, speculation quota for your portfolio. So you could be have maybe some stocks and shares ISAs in the background if you're in the UK, or buy into a Vanguard or something, and that would be your 5%, and then this could be your main vehicle for growth. However you need to do it, it's aimed at people who are sort of taking the growth side seriously and are not expecting to blow up in the next year or two. Right, I'll leave it there. Thank you for watching, and I'll be around for questions and all that in the comments, of course. All the best. Bye-bye.